Afternoon, everybody. Barry McGuire here for Barry McGuire's Creative Real Estate Education. Creative Real Estate Education. So it's live at 5. It's Thursday. Today we're going to talk to Shelley Visser. And Wayne and I are going to chat with Shelley about private lending. Private lending. Private lending is kind of all the rage right now. It's always been around. Remember, well, I should say this, it might offend some people, but I recall that Jesus threw the money lenders out of the temple, didn't he? Money lending's been around forever. There's money around, there's people to lend it. So it's just going to be just a kind of a starter, dipping the toe in private lending from a private person's point of view. Shelley's done a lot of things over her career, and private lending is one of them. So without further ado, let's bring up Shelley and Wayne, and we're going to get this party started. Hey, you guys.
Hi.
Howdy.
Hello.
Shelley, so nice to have you on. Thanks for agreeing to give us an hour of precious lifetime to chat about something that you do that I think will be very interesting for anybody who's listening. So I appreciate that. Thank you very much.
Well, thank you for having me. I would not miss it.
Okay. Well, before we get started, I really always find it very useful to have background on people. It's helps to understand, I think, if we talk about you and kind of who you are and where you started in the real estate business, what you do for your job. So give us your background. Who is Shelley? I mean, why don't we start with your job, kids, starting in real estate? Give us that.
Absolutely. So who is Shy Shelley, as I like to say? I live in Calgary. I used to be a flight attendant with a major airline for just over 17 and a half years. Thank you to COVID. I have now just recently been what they call furloughed. So yes, we're furloughed. They don't want to say let go because they're hoping to bring us back in time. So we will see what happens. I'm a single mom. So in February, my youngest but moved out, and I am a full empty nester, and I lost my job. So yeah, it's there's been a lot of
You're doing good. You're doing good.
I know, right? Yeah, but there's some rewards with that as well. So between flight attendant, being a single mom, raising my kids, and then as well, I have real estate portfolio of different adventures that I have done along the way.
Well, let's talk about that. I mean, everyone gets started in real estate somehow. They get introduced to it some way. How did you come across real estate right at the very beginning?
Oh, the very beginning was actually started with property management in an apartment building. Mm-hmm. So I was looking for a way to reduce expenses. I was putting my ex through school at the time. I had my son was just a toddler, so trying to find a way to pay all the bills, and so decided to do some property management. No experience, but somehow they believed that I could take care of all these units. Gift of gab, maybe, I don't know. But yeah, so I moved on from one building to another bigger building, and through that, I started to see the value of real estate. And then we moved across the country a few times, and when we settled in Calgary, it was you could see that the values were starting to go up, and at the time we wanted to purchase a house, but a pre-built home was more expensive than building brand new. And back in the day, they had the sweat equity program. So my ex had some experience. I have some experience in design and architecture. So we decided to build our own house. So we started off, I guess, as developers, really, which is kind of interesting. But I mean, yes and no, because you're building through builders. But we still built, our very first project was building our own house. And we actually redid the whole drawings for the house, which they ended up taking on to themselves. We had to stick with the concrete footprint, but we could redo whatever we wanted. So we actually redid the whole thing, made it a unique house, and they actually liked the plans, and we sold it a few times. So yeah, so that's where it got started. And then from there, I bought other houses and did more renovations, and then did more flips, and then bought suited houses. and then started doing private money lending. And now we've bought a development in Cranbrooks. So yeah,
Oh,
kind of full circle.
holy smokes.
Wow.
Well, like, being shy Shelley, I'm sure helped, especially starting out there in those, managing those apartment buildings. I'm sure that was a big help for you taking care of those tenants.
Right?
Yeah. Yeah. No, well, isn't that interesting? And that's why I wanted to hear what your background was, because to me, that's an absolutely fascinating story and a really good way to have gotten involved. I mean, just starting out as a manager, I mean, you're sort of getting all the experience with the things that first time investors worry about. They really worry about the management side of things.
Right.
So you got to see it, and I guess it didn't scare you because you in the end carried on and did more. So that is an absolutely fascinating story. I really like that.
Thank you.
Like that. And what time span are we talking about when you started out in property management? I mean, how long ago was that?
You never ask a lady her age, and that would really date me. So,
So a long time ago then.
Well, so probably about 90 through, I'm going to say, geez, I think 93, 94 maybe?
Yeah.
I'm trying to remember because we moved around a lot. So in 92, I know I moved across the country, but then I moved to Newfoundland, and I moved back to Halifax, and I was moving all around. So I'm trying to remember the last part of it, but I think it was maybe 93, 94 is when we started the property management.
So you've had your toe in the real estate waters in one way or another for a long time.
Absolutely. Yeah.
Huh.
Yeah.
All
So
right.
Stories.
What's that?
You've got stories.
I have many stories. Am I surprising you?
Well, not really.
No.
I didn't know what your story was, Shelley, but I was pretty sure it was going to be interesting and multifaceted. Pretty sure. And it turns out that's exactly what it is. So,
Yep.
all right. So for all of those things, I mean, you compressed quite a few years into a short time frame there, as you say it. Well, let's get on to the private lending side. You've handled a number of real estate strategies, but somewhere along the line, you had the opportunity to lend your own money. I mean, normally people go to the bank to get money. They go talk to a mortgage broker who finds them money. They might talk to a private lender, although that's not the first step for lots of people. But how did you actually come to lend money on your very first loan? How did that show up?
That's actually a really good question. My very first money loan was actually with an accountability partner that I had in one of my real estate mastermind groups. And he had needed some short-term financing, and I had some spare money hanging around. And so we were talking about it, and I've been hearing, more and more about private money lending. And it's so funny because years ago when I started my real estate journey, I never thought I would have the money to be the money loaner, I guess. Sorry, that's bad grammar. But, you always hear those stories in these real estate groups. Oh, I'm looking for the money. I'm the working partner. I don't have the money. And people would say, you wait, one day you will be the one looking for the working partner. And I was thinking, oh, there's no way. And I didn't come from an economic background that was great at all. So I didn't have that handout or any of that. And I was thinking, nope, I had to work my way up there. So I never thought that would be possible. Plus I had the passion. I loved the renovations. I loved the tenants. So I didn't mind being that working partner, right? It was the energy. But now I'm getting older and I have a lot of experience. So I'm kind of like, you know what, maybe there is a way to make just as much money. And, as you build up your portfolio and your equity and you as you come along in life, you gain a little bit more financial benefits and hopefully a little bit more smarts. So I had this money. And so when I met the first person, he had a short-term project for just 3 months. And I thought, that's a perfect way to get started. It was just really kind of bridging off a loan. They had to pay someone out. They weren't quite finished the renovation. And then it was a chance to wait for it to also sell. And And so we talked about it. We did a deal on paper, and paid out 3 months. And then I was like, whoa, wait a minute. Time is money. I just regained my time and I made the money. So it was like really like, oh, now Shelley's hungry for that.
So, part of you being able to do this, and I want everybody to hear it, part of being able to do this is your understanding of real estate and your being around real estate. Being involved in fix and flips and putting in suited properties and doing various kinds of renovations. All of those things make you familiar with numbers. They make you familiar with, probably unconsciously, when your accountability partner said, I need 3 months worth of bridge money to finish this project off. I'm sure that you were able to, because of your experience, assess the project, because you're never going to lend money if you think it's not going to be a successful project. And I mean, did it require him he needs your money to finish the project so he can sell it and pay you back? Is that how it was?
Absolutely. Yes. They needed that little extra bit of money to finish the construction, and then also to pay all the holding costs while they were waiting for it to sell, right? Because you still have the mortgage, you still have the hydro, you still have, the taxes, all of that to still pay. So, and absolutely having that renovation experience really helped me to be comfortable understanding what a project was, but also being in real estate, I also understood the market. So I knew, like, are we going into a market that's declining? Are we in a market that's stable or increasing? Where is the market? What are the backup plans? If he doesn't complete the job, then what? Where are the backup plans? So absolutely, that experience made a big difference.
Well, folks, if you're listening, what every lender does, whether they're a private lender or the biggest bank, what they do when someone comes along and wants to borrow money is they go through this formal process called underwriting the loan. And that is, it's a diligence process that a lender goes through to decide whether or not, if they lend the money, they're going to get paid back. And so, the mortgage brokers and lenders have, I think, the 3 C's of credit or the 5 C's of credit. There's a bunch of C's that go into capacity and confidence, and there's a whole bunch of words that start with C that go into that. Donna, why don't you just research that? You could look up the
clarity.
Yeah, Shelley. What are the C's, Shelley?
Confidence. Never confusion.
Never confusion. But you have to, as a private lender, you have to underwrite the loan. And so Shelley was unconsciously, not even knowing she was doing it, was underwriting the loan through her experience. So if this was a loan to finish a project, guess what? Shelley has already done a bunch of projects and is familiar with what it takes. If somebody says, I got to finish a project, Shelley goes, oh yeah, what do you got left to do? Let me go have a look at it. And so that would be something that Shelley would have been familiar with, which makes it way, way easier for her to say, okay, I see what you're looking to do. I know what market we're in. I hear you tell me what your costs are. So Shelley, did you in that first, and probably a while ago, so it may be hard to remember these details, but did you do an analysis and say, okay, the project is going to be worth, $400,000 when it sells? He's going to get 400. His first mortgage financing is 300, and he needs 25,000 from me. That means he's got 75 profit in the deal. It's a rising market. Tell me a little bit more about how you actually assessed and made the decision to go forward.
Sure, and how I assessed it back then to kind of what I do now. It's an evolving process. However, I did not too bad considering it was my first time getting in, and part of it that helped was they were a realtor as well. So I asked for comps. I wanted comps to know where it was at right at that point, because if I had to take over the project and finish the work, I was prepared to do that, because that's how I wanted to make sure my risk assessment and analysis was done, knowing that what is the worst case scenario? They don't pay, I take over the project, all right, where are we at? Where's the value of where the project is at? Wanted to know where the value of the project was at the end. I wanted to know the timeline. I wanted to know their contingency plans on making it. And then I wanted to know who they were, because that makes a big difference, right? That was
Character.
huge. Absolutely.
A C word.
The numbers are numbers. Like, that's not, you can generally almost always fix the numbers. I can't fix you if you're not a nice person or you're deceitful.
Mm.
Yeah.
Mm-hmm.
Right.
Yeah. So yet again, it comes up, and you know this because you've helped us out at our focus workshops and been to quite a few of them. You know that we all believe that the character of the person you're dealing with is important. So it seems to be as important when you're being a private lender.
Oh, absolutely. Absolutely. And I think, to me, that's more important is your character, right? It really is, because if you don't have the integrity to manage the project or what money is being given to you, you're not going to get more. This industry is really small. People forget, and people will talk. People know who has not had that integrity. And there's a difference between making a mistake and saying, hey, here's what went wrong. Here's what we're doing to fix it. That's different than somebody who is just, I don't know the term for it, but, shelling the money from one thing to another to cover their butts. Yeah. And then all of a sudden you get in trouble. What is it called?
Kiting. That's called kiting.
Kiting. Oh.
Kiting. It usually refers to checks, when you put one check in an account and in another account, and as you wait for them to clear. So I think it applies to that situation as well. They're shuffling things around, hoping nobody catches up with them. Right,
yeah. And I get, and we all, if you've been in the real estate industry long enough, you know that things don't go always right. Renovations, rarely ever, end on budget and on time. That's why we always have contingency plans. I'm going to plan for 4 weeks, but I'm going to say 6, Yes. I'm going to have that reserve plan, and same with, when you're doing a project, whether it's bridge financing or a renovation, or you're being a JV partner, things don't always go right. And that's okay. But be honest and tell me about it. And then tell me what backup plans you had. Or if you don't know, because maybe you're newer or just have never dealt with that experience, just say, I don't know what to do. Do you have a network that I can reach out to and ask?
Mm-hmm.
It's about finding a solution, right? But I can't find a solution if you're not going to be honest and have that integrity.
That's it's very cool that was your first project, because really it's like you're going, this is what I do. I've done a whole bunch of these in my real estate career. Essentially, it's like I'm doing the project, and I'm figuring out what it'll take to finish this and be successful at it. And if I can figure it out because I'm doing my diligence, then I can give a yes to this. That's just so aligned. What a great first project to start out on. I really like that.
Thank you.
Now, what kind of paper did you do? Did you do a formal loan document? How did you secure yourself?
Yeah, they actually did the paperwork for me. I have found with the different money loans I've done, some of them I've done the paperwork on, and some they have their own paperwork. So it just kind of depends on the deal and what the structure is. I don't think there's any right or wrong way, as long as you both have done your diligence, had your lawyers check it out, and everyone's happy. It doesn't really. I don't think it matters. I don't know. Maybe I'm wrong, but as long as there's something there.
Well, certainly you're right that you got to have some paperwork. But if you're doing a fairly simple loan with fairly simple terms over a shorter period of time, where you have pretty decent coverage, then you can probably say to your borrower, listen, you get your lawyer to draft it up. I will read it over and maybe get a little advice from my lawyer, and that's a way to do it. But the point is you certainly need to have some paperwork on a loan, because if they go bad,
Absolutely. Yeah, and I've done some as simple as just a promissory loan note, and then I have some that have actually been mortgages drawn up, and then some that have been far more in-depth documentation. I don't even know what they call it. This one, because we're actually doing a build, or helping to finance a build out in Ontario. They have quite a bit of documentation, and I think some of the extra detail is maybe because it's Ontario paperwork that's required. So, we just read through it. It's basic paperwork. So, and then as far as security goes, all depends on what the project is. So some of mine I've been registered on title and maybe not on that project either. So I have a couple that are out, and I actually have the documentation registered on their personal property. And then when we did another private money loan, I said, I'm not comfortable with the spread now with what's between what you have on your mortgage, your own house, and what we've registered on our other loan. So we registered it on some other property, not the one they were working on. And it's important to know what that project is, because, for instance, if it is a flip you're trying to sell, it goes on title, your documentation. And sometimes that can hold up a bank refinancing, right? If they see that there's other money involved, or maybe it'll hold up a seller sometimes. So if you want to, as long as you have that dialogue with who you're investing with, you want to know what their plan is, it will let you know whether you should register your document on that property or something else, or if you want to spread it over a couple, because sometimes there's maybe not enough on one. So maybe you need 3 different properties that you're spreading your documentation on to protect your assets.
Wayne?
Do you mind if I ask, from a legal perspective, when would you do a promissory note and when would you perhaps do a mortgage document? Is there a certain amount threshold, or, is one better than the other, and then why?
For me?
For either of you, just from a legal perspective, like when would you do a promissory note and when would you write up a mortgage contract? Is it just a matter of how much money it is, or why on one deal and why not on another deal?
Well, personally, on a promissory loan, I've done it on just money coming out. The one time I've done mortgage is when we actually paid cash for the property, and then that person actually paid us as a mortgage.
Okay.
Yeah, so then we did it up as a mortgage. We were literally the bank, okay, because we paid cash. So we were first position. Mm-hmm. Promissory loans they tend to be unsecured, but you can secure them. I have secured them.
Can you secure it on a piece of real estate, on title?
Yes, you can. So you can do a promissory note. The one critical thing when you do a promissory note is, so if I draft up a note that says, I, Barry McGuire, do hereby state that Wayne Hillier has lent me $25,000 for the renovation of my house at 9669 84th Avenue, and I do hereby promise to pay Wayne $25,000 with 10% interest starting here and finishing there, signed Barry McGuire. So that note cannot be secured against my property. And the reason is that it doesn't have the magic words, and I hereby charge my property with repayment of this debt. So it's a little tricky when you're drafting a note. So yes, it can be secured against a property, mm-hmm, and it could be secured against, as Shelley was saying, you might be securing it against 2 or 3 properties. So you don't have to register it by way of caveat against a property, but you can do that. And really the main reason that you would choose a mortgage and related mortgage security over a promissory note is that a mortgage is a better document to have if you have to enforce it. You have to sue. The mortgage is much more in detail. It always says that the borrower is going to pay your lawyer's fees and disbursements. It lets you appoint a receiver. It's just got a whole whack more benefits for a lender than a promissory note. Promissory note is evidence of a debt, and yeah, you can put it on the property, but if the loan goes bad, then you have to launch a statement of claim that's based on the promissory note. If a mortgage goes bad, there's a really well understood mortgage foreclosure process that gives a lender a lot more oomph when they're trying to enforce.
I kind of relate it to also, like, if you have a joint venture with someone, you have a joint venture document, you register it on title, the promissory note is there just so that when people are going through the title, they see everything that affects that title.
Yeah.
Right.
Yes. And
who has that property, right?
Shelley's right about being able to where you put the loan as the lender. You want to make sure that you have the kind of loan to value ratio that your lending plan says you need. So if your lending plan says you're never going to have anything smaller than an 80% loan to value, then you have to do some diligence on the properties where the borrower says he has equity and where your security might be, and make sure that you do have that 20% equity in a property. And if it isn't there, yes, you might have to put it on other properties, 2 or 3 properties, in order to make sure you have enough equity in enough properties to get your loan to value where you want it to be. And again, Shelley's right about if the borrower is actively working on a property with active first mortgage financing, that first mortgage lender might not like to see a new loan on that property because they have their rules about how much financing can be on a property.
Right.
So if it can't go on the property that's the subject of why the borrower needs the money, it has to go somewhere else, and it could go on 2 or 3 or 4 properties. Although that would be a little cumbersome if you were getting up to that, but probably a couple, maybe as much as you want to go. So
Tammy's just got a question here that's on topic about promissory note. How is the investor protected? What wording and terms would you put on a promissory note?
My promissory notes, pretty much, they're very clean, very simple documentation, in that it'll say, who's lending. I don't even want to ask. Who's lending? Like, so Wayne, or I'm investing. Wayne, I'm lending Wayne, $100,000. It's going to be paid out on such a day.
Sounds really nice, actually.
Yeah, there you go, right? So, we've talked. You've got this renovation that you're doing, and you just need it for 3-4 months. So we're lending you $100,000. It's going to pay 12%. We're going to decide if it's monthly payments or a balloon payment, what the interest rate is. It obviously is it annual or, what do they call that? If it's not annual, oh my gosh, I just went blank on the term.
Annual, one balloon payment of interest, monthly payments.
Yeah, and then it would have your name, my name. I also have your phone number, your email, your address. I also take your social insurance number because then we can write you a T5. So unless it's running through a you can only do the T5 if it's through your corporation. If you're doing it through personal, then you can't write a T5 to someone, but then you both have to declare it on your taxes. So yeah, very simple. I'll say what it's for, what project it's for, what the address of that is. I'm trying to think what else. I think that's, if I die, where's the money coming back out of? Or if you die, what's happening? Yeah, I'm trying to think of I just pull up my document all the time. We just fill in the spots.
and Tammy, you can go to what's that website called? Like lawdepot.com, and they've got templates there you can have a look at and just kind of see the generic template for promissory notes, and then you just kind of tweak it for specifically to what you're doing. And obviously if it's being registered on title, you're going to want that one little line that Barry had mentioned as well.
Yeah.
But yeah.
Well, is that Alberta based though? That might be only Alberta based.
That is an Alberta based requirement. Other provinces might have different requirements.
Gotcha.
Yeah.
So Tammy, promissory notes are, as Shelley said, quite simple. They really just tell the story of who the parties are, how much money is being lent, what the terms of the loan are, and then Shelley had some extra things that she puts in there. But by and large, they are a simple 1, maybe 2-page document, maybe 2 pages, when mortgages are 10 plus pages. So,
yeah.
I actually love promissory loans because they are so simple. It's so clean. The person who's investing with me, it tends to be not as sophisticated as probably a lot of people on this call are. They're not as, so I like it because it's very clean cut. They can refer to it anytime they kind of go, oh, what was that? They just pull out their document. It's easy to read. There's just no stress with it for them. And that's what I like, is keeping it simple, because I find this more simple you keep it, the more faith and trust they have in you.
Mm-hmm. So staying on the topic of promissory notes, Jared also asks, are promissory notes more common in short-term lends?
I have some that are long-term, like long-term meaning like a year to 2 years.
I think they're more common for smaller amounts of money where you have a whole ton of protection and where you really have a strong belief in the person and the project. I don't think anybody's going to lend or shouldn't be lending, in my legal opinion. Shouldn't be lending Wayne that $100,000. Maybe you lend me $25,000 on a promissory note, but I would never lend Wayne $100,000 just on a note. I mean, that would be the height of irresponsibility, as far as I'm concerned.
Folks.
And yet I would. So, but I register. Like it depends on the deal. So
it does. It depends. It depends on the deal.
Yeah.
So
and again, to the person, you're right. I mean, when we know somebody, just like, we wouldn't lend to Wayne, but we might lend to somebody else. So,
right. I mean, that's the thing.
You're killing all my JV opportunities here, by the way. Like, I'm screwed.
We're having some fun here, but really, folks, I hope when you're listening to this, you realize that we're all just playing along with each other. And I'm sure Wayne is an excellent credit risk. I'm absolutely sure.
Right. Yes.
Oh boy.
Oh man.
I can always vet for him.
I just came on to be the punching bag today, I guess.
Yeah, that's the thing. The foil. So that's a really great story about how you got into it, and what a nice entrance using your real estate knowledge that you already had to assess a loan on what you knew about intimately. That makes such a big difference.
Mm-hmm.
So, people, if you're listening and thinking about dipping your toe in the water, Shelley had a whole whack of experience before she ever did a loan, and then she did a loan on something she understood thoroughly. So. We are definitely not suggesting that everybody get off this call and go hit their line of credit and just start lending money left, right, and center. I think I want to say right here.
Unless it's to me, or Wayne, but after you going through me.
Like anything else, private lending is a strategy that you need to educate yourself on. It's all about education, and you need to get some experience. And normally, if you were starting out as a fix and flipper, that's a strategy that really teaches you a lot of things.
Yeah.
It's almost impossible, I think, to do your first fix and flip and come out of it unscathed and making what you thought you would make in the amount of time you thought you would make it, and experience only the problems you budgeted for. That's really difficult to do, maybe impossible. And as you carry on, it's still hard to be a successful fix and flipper. So if you want to be a private lender, it's maybe not as kind of incident ridden as being a fix and flipper, but you do need some help. And so if you're thinking of doing private lending, I would never ever tell anybody to just jump right into it with both feet. You are way better off reading a whole bunch of stuff on private lending. And for your first loan or two, I mean, I would call up a Sean Impey, call up somebody whose job it is to figure out lending, a mortgage broker or a mortgage agent, as they call them in Ontario, and talk to them. You could say to them, listen, I've got $100,000 that I would like to lend, but I don't know really anything about it. How about if you find me an appropriate loan and you do the underwriting and you go through all of the steps that we need to go through. And then you would enter into a conversation with somebody like Sean, and he'll go, okay, well, I need to talk about your risk level. What kind of loans are you interested in? If you're only interested in lending on first mortgages in very, very great areas of Edmonton or Calgary, really nice areas of town, if 65% loan to value is as much as you want to go because you're interested in safety, then that's one thing. If you're prepared to go out of town and be a second mortgage on a rural property where there's already a first mortgage, but you'll go up to 85% loan to value. That's a whole other proposition. You make a whole bunch more money if you lend there, but you have a whole bunch more risk. So a broker like Sean can take your money and invest it for you, and of course charge you a fee to do that. That's the business he's in. But you could do that a number of times and work with and look at what Sean would do to make you have or to make sure you lent money on a safe basis for the kind of parameters that you're prepared to lend in. Some people are very conservative, other people are prepared to take lots of risks. And it's a simple correlation of the bigger the interest rate you're earning, the more risk you are taking on. If somebody, I saw a loan today where the value of the loan was 20.9%. 20.9. And I think that they're in maybe the upper 5% of loan to value. There might be a first mortgage with 90% on already. And so this loan is skittering around in the last 5 to 10% of the value of the property, and the lender's getting paid 20.9%. You comfortable with that risk? Wow, that would be a tough one. So, coaching. Don't you guys go just putting an ad in the paper and say money to lend and take a promissory note that you find on the internet, because you get your ass burned if you do that, for sure.
It's important. I'm glad you said that. It's very important.
Yes.
Yeah, absolutely. And research. I mean, absolutely. Like, people like Sean are great, like you said, for your first time, because they're doing all that vetting. They have the years of experience. And they also have the tools available to them to check into these deals before they even bring them to you.
Yeah.
Right. So which is so incredibly important to protect your asset and to protect your asset. So I didn't know if it came through properly.
You enunciated it perfectly.
Good.
That was good.
And there is risk, like everything. But there's risk with, if you buy a house, are you making money? Did you buy it right? Are there problems you didn't pick out? There's risk with private lending. The responsibility is to do your diligence and gain your knowledge and talk to people who've done it. Who are their references? Like, I had somebody who was going to invest with me. I have people who I have loaned with, and they're more than willing to talk to you, to tell you about their experience with me.
Yeah,
absolutely. I don't have anyone, and I have somebody where we didn't close on time because of COVID, but they'll tell you my communication was up there. I kept them informed. I gave them options, all of that, and that to me is a more valuable reference than somebody where everything went right. I'd rather you talk to people where things didn't go as we thought, and how did I handle that situation?
Well, that's very important, because every deal doesn't go properly. And yeah, it's the effort you put into recovering or repairing or dealing with the problems that deals often show up with to bring it to a successful conclusion. That's really the measure of the person you're dealing with. That's absolutely true.
Yeah. And when we took out that loan, we didn't know COVID was coming. So we couldn't have we couldn't have anticipated that mid-April and everything was going to shut down.
No, that would be a hard one. Had you predicted that, you probably would have predicted a few other things, and you wouldn't be on this call, because you'd be on your private island somewhere not worrying about COVID.
Right. I would have invested in a few other stocks now that I know.
Don't say GameStop. Don't say GameStop.
No GameStop on this one. Shelley, how about let's move on to a few more of your loans.
Do you mind if we just kind of answer this last question that someone asked about promissory notes just before we move on? They asked if you can elaborate more on what to mention on the promissory note in the event that either of the parties die.
Yeah. So what I have done, depending on what the money has been for, I've just said that my estate will take it over to complete the deal to make sure they have their money. Their money is, as safe as we can make it. So when that project finishes, they will still get paid out. So I actually just keep an accounting so that all of my deals, actually even my bookkeeper knows. So if something were to happen to me, she would know who to contact. She knows what deals are out there. I actually have what I call my death file on my laptop as well. So they just have to pull it up and say, okay, here's all the deals in the tracking. Here's who to contact. So that deal can still close. But if there was a problem, I also have life insurance policies that will pay out to cover some of my projects. So, I mean, it also depends, like what, but now let's go the other side. Let's say the other person dies, their estate needs to know that they're not getting paid out early. We still follow the terms of the promissory note. So
Yes.
that's just
That's an important thing for people to know, is that if anybody gets into a deal and then they pass away, just because you passed away doesn't mean your estate can come along and cancel everything you've been working on. Your estate is you. They have to carry on and live with the deals that you put in place and work their way through them and finish them off. So, and that's good for both parties in the loan to know. So.
COVID was the other C.
COVID was the other C. Thank you, George.
I don't know who
That
you
should
are,
have been so
but I
obvious.
like your humor.
Very good.
Okay, we want to hear about some more deals. Tell us at least, let's start with another deal that you think would be interesting for people to hear about. And your first deal.
You know what? A deal that really actually had a heart impact for me was one that was brought to me from a friend. They weren't able to do it. And I was still getting my feet wet on different types of private money lending. And it was a mortgage where we were buying a place. And this person had some really rough stuff going on, a whole bunch of unfortunate situations. And they had an opportunity, their employer that they had, so she was like an in-home care nurse or caregiver that went into the home. Her client, anyway, passed away, left her mobile home to purchase. But she didn't qualify for a mortgage on it because she was self-employed, was one, and hadn't really worked enough in that time to qualify for the mortgage. It was also an older trailer, so they like a higher deposit. And on that one, I don't think they owned the land either. I can't remember actually on that one. I can't remember. So that has a different parameter for mortgages as well, if you own the land or don't own the land on a mobile home park. And but she was coming into some money from an estate from her father. And so she was going to have more money for a down payment. She just didn't have it right then. And this mobile home also needed a lot of work. So she couldn't afford a lot of interest. We actually charged a low interest rate, which normally wouldn't appeal to a lot of investors. But sometimes you do something because it's the right thing to do. And for me, this business isn't just what money I can make. It's never been. It's about relationships. Don't get me wrong, we all want to make money, but it's also about what you can give back, right? So, or a helping hand. I've had lots of people give to me. I've had a lot of people give me a helping hand. And so it was a way to help someone else. So we went through a whole diligence and went through the process, including I actually got copies of the documentation showing that she was due to get this estate that was tied up with the courts, but we had all the legal documentation. So I validated everything she said. So we did a mortgage with her. We set it up for, I think it was a 1-year term. We renewed it. And then at the end, I was like, okay, we need to get you going. Like, your taxes should be there. And we were following up. And she was getting her taxes done. She got her payout. She actually used to repair mobile homes. So she also had that ability. So, and again, I looked back at it and went, okay, if she doesn't do the work, can I take it over and fix it? And then I can flip it. Where was the market? I looked at all of that. But through the time, she did repair it, added a lot of extra value to it, pretty much doubled the value from what she had to pay for it to what it appraised for at the end. At the end, she didn't want to go to the bank. She's like, oh no, I like you, Shelley. You've been so good to me, blah, blah. And I kept saying, no, because we're charging you more than what the bank will charge you. And don't get me wrong, it was 5% interest that we were charging. So like I said, we were not making a whole lot. But I knew at the bank she could probably get 2.5%, 3% maybe at that time. So I made her go and get it. Well, thankfully she did, because at that point she paid off her van, she paid off a couple of debts, and then also got the mortgage in her name, and her mortgage payment, even after paying off all the debts, was less than what she was paying me, even though she didn't want to. So she was so ecstatic, because she's also got this home now that she can age in place in and have a bit more of a future. So, you don't make a lot on every deal, but that one was the right deal. And that's a deal that's always stood out to me on what value are you providing to others, and not just money, but in value of their life. How are you impacting people and making a difference in their life? So yeah, so that's one story.
That's such a good story. What was that echo? Yeah, so we play for win-win in all the courses that we teach, and it's part of creative real estate education. And Shelley's always believed that. We always teach it. She always does it as she possibly can. And so that's yet another really interesting story from someone who does private lending sort of on the side. I mean, she finds someone and finds out they're actually good with fixing mobile homes. Finds out that there's an estate. And by the way, folks, you often hear people say, you know what, I'm coming into some money. I'm inheriting some money. Well, guess what? You actually do have to poke away at it and find out, usually through the estate lawyer, whether or not this person is a beneficiary in the estate, how much they're going to get, where the lawyer is at in getting the estate probated, and when is the money from the estate likely to come into the person's hands. So that's a big diligence piece. If that's how someone is gonna pay you back, it's a big diligence piece. So, and Shelley, I know about people who just want to stick with you because it's they like you and it's a decent rate. I've been through that myself in a couple of done a few private loans, not very many, but I have exactly that happening where you're going, for God's sake, go to the bank. I mean, I had one where 3 years in a row, I sat the husband and wife down and I went, you're paying me this amount. You could be paying half of that amount. You can qualify. Yeah. Go to the bank.
Yeah.
It took 3 years of annual sit down before they finally went to the bank and decreased their payment and got set up nicely and were way better off for it. But
absolutely. And it's such a great feeling, right? That's what real estate is about. It's that great feeling, right? You're providing a home for somebody, no matter how it is, whether it's an actual home you're buying, you're putting tenants in, you're providing that quality home, or is it through private lending that you're allowing a builder to finish a home for someone else or carrying the mortgage for somebody? We're creating homes. We're creating memories. That's what we're doing.
We are. Now, Shelley, I want you to think about one more story while we answer Jared's question, which is, as a private lender, is there such a thing as first position on a private loan mortgage, or do you have to write in creative contingencies for that? Well, Jared, the answer to that is that when you are a private lender, it's no different than being a bank lender. You're a lender. Lenders are lenders, public, private, banks, credit union, society, doesn't matter. If you are a lender, one of the things you look at, if property is going to be your security, one of the things you look at is the title to the property against which the borrower says they want to secure the loan. So you get the title, and if they have a clear title, in other words, no other financing to anybody, and you're prepared to lend, then you would be in first position. You'd be first position on your private loan to whoever the borrower was. That doesn't come up too often, I don't think, in private loans. We often end up doing second position loans. I mean, it does come up sometimes, but second position loans are, come up more often. So when you pull that title, you might see that there's a loan to Bank of Montreal for $200,000. Everyone agrees the property is worth $300,000 all day long. So that means the seller has $100,000 worth of equity. You'd be in second position if you lent money. And the question you're asking yourself is, within that seller's $100,000 worth of equity, how much am I prepared to lend? So yes, the answer is yes, you could be in first position on a private loan. Shelley, back to you. I need one more story from you here on a loan. It doesn't have to be.
Can I talk about if you are borrowing the money, be sure to be communicative. Don't make the person who's lent you the money ever worry, ever. So you pay, if not on time, like on that day, you always pay early. Never make them wonder if the money's coming through. When your loans are due up, have that communication maybe like 6 weeks before it's due, because maybe they don't want to be paid out at that point. Maybe they want to extend. Maybe they do want to be paid out, but you don't know what's going on. So have that communication with them. Be a good borrower.
Yeah, and if you're a good borrower and you pay back your loan and you need more money, and you go back to Shelley and you were a good borrower, well, guess what? Shelley is far more interested in lending to you. In her mind, and properly so, she already knows a bit about you. She knows what kind of a borrower you are. And as a lender, she wants to know what's going on with her loan. So if you were a good borrower and you need to borrow a second time, it's probably way easier. Of course, diligence will be done and all that has to work out.
Yeah.
But I mean, you always, in the back of your mind, are going, all right, what are they going to be like for payments? Looks like it's okay, should be a good loan, but what are they going to be like? Well, Shelley knows what you're going to be like. So,
and if you're looking to invest with someone as well, don't waste their time. So if they've sent you the information on the deal, don't drag it out and then at the 9th hour pull back, right? There's a lot of times people say they're going to do the deal and then pull out the last minute. Well, you've hooped that person and put them into an awkward position as well. So if you're going to loan somebody the money, be a good loaner as well. Check their if you're going to say you're going to check the references, check their references. That you don't have to. That's fine. But don't say yeah, I'm interested, and then there's a difference between getting the information. You sit down and spend the time to get the information. There's a time where you go, are you ready to do the deal? Oh, I just need a few more days to think about it. Just need and drag it on because we're going to go on somewhere else. But we'll also remember that when you want to loan that money, you're probably not top of our list. I need somebody who's going to make a decision. Yeah. And say yes or no. And no is okay. No, I'm not comfortable with this loan, or no, I don't like the terms, or sorry, I don't have my money. That's fine. But an answer is required.
Mm-hmm.
And in order to not drag things out and cause your borrowers distress, you have to know who you are in the lending game. Before you start being a lender, you have to think about who you are and what are your lending parameters. What kind of risk level are you ready to go on? Will you lend only in a major center, or will you go out to smaller towns? Will you do rural properties? Will you do second mortgages? If so, what's the limit on the loan to value? Will you go thirds? You just want firsts that are really secure? You have to figure that out, because otherwise you will dither when a loan opportunity shows up. You won't know what to say or do. You go, oh man, should I, shouldn't I? And that's not good. So as you get started, probably better to stay on the conservative side of things and really know who you are in the lending game. Guarantee you, if you do a 10% loan and it goes bad, I mean, you love those big payments that are coming in when your interest rate is 10%. But I will guarantee you that if the loan goes bad and you have to foreclose and or you don't collect, and that happens, your lender's remorse will have you saying, I should have kept my money in a savings account. Why did I do this? I would have been happier to earn my 0.25% or 0.1%. So
yeah, absolutely. And there's nothing wrong with asking somebody, I need more information. Absolutely. Or if somebody says no to me, what could I have said or done to help you say yes? What did you need from me? Because then I can improve my presentation to you. Now, sometimes they're just not comfortable. They're just afraid to take that step at that point. And that's fine, but own that. Just say, you know what? I wasn't quite ready. That's all right. That's all right.
Mm-hmm.
I'm not sure. So, but don't be prepared or don't be afraid to grow, both from being a borrower or a lender, to learn so that you can become more proficient on either side.
And I like that point where you say, don't be afraid to ask more questions. When somebody approaches you for a loan and they tell you roughly what the loan is and why they want it and what's going on, if you don't have all the information you need, or if the information they've given you isn't in depth enough, as Shelley says, don't be afraid to ask. It's your money. Let's let's get the kind of information and all the information that you think you need in order to be comfortable with your loan. I mean, it's your dough, and the only one who's going to get hurt if it doesn't get paid back is you. So, like lots of creative strategies, you have to start slowly. You have to read a lot. You have to probably take a more conservative approach as you get going. Strongly recommend that you're better off getting help and putting your money with a guy like Sean Impey and watching very carefully what he does to see whether or not he's putting you into a good loan. You can learn by doing that as well, and that's a really, really good way to learn. Lots to it. There's definitely lots to it. Okay. Question: do you write a clause in the contract in case the project doesn't go as planned and the borrower can't pay the loan back on the maturity date? Well, Shelley, what do you say?
I think it depends on what my project is. I don't always, but that's where my communication comes up. Whether I've loaned the money out, that's what I'm talking about, that communication. You know, let me know ahead of time what's going on. With the loan that I had out that was due actually April 15th, right in the middle of COVID. You know, when COVID happened, everything started shutting down. I was like, oh, crumb. Like, I don't think we're going to be able to pay this out. And so I had that communication with them and said, hey, you know, because of COVID, like I've never had this happen before, but because of COVID, I don't think we're going to be able to pay you out because the house hasn't sold. Now your money is still safe. It's still locked up. You're going to keep making money, but I would like to extend it till June so we can see what's happening over the next few months, right? I said, now you have a choice. I can replace your money. I can find somebody else to invest and take your position, or we can extend it, or I'm open to some other suggestion you might have. But I gave them those options, and they were like, oh, no, I'm fine. It's secure. It's fine. You mean I make more money? And I'm like, oh, absolutely. You make more money. It's just, I can't close. And so I went ahead of time. So I didn't have that in any of my contracts or any of my promissory loans, but I'm on top of it with communication. I'm on top of it with my projects. Where are they at in completion? How are they going? Because I want to make sure that I'm protecting my investor, because really, this isn't a one-time deal. I'm building relationships. I want to know that if I say, hey, I need some funds, I'm not having to wait days or weeks. I'll have those people within hours saying, I'm in, because they already know that relationship I have.
Right.
Yeah. So there's kind of two ways to look at this question, I think. What Shelley did on her loan was coming due, and most loans don't have a definitive clause that says, well, the loan is due on April 15th, but if you can't pay me back on April 15th, then I'll give you this extension, and here's how I'll extend. Sometimes they say that. Mm-hmm. Sometimes they say, you can't pay back and you need an extension, I will consider it. So it's nothing more than it's kind of a throwaway clause. Yeah. You can come and see me and talk about it, and maybe I will and maybe I won't. But all loans have the capability that if the time comes for payback and the project doesn't go as planned and the borrower can't pay the loan back, as lender, without more in the contract, you have the right to be paid back and to take legal action if you haven't been paid back. So that's the nature of all of the loan documents that you would set up. It gives you the right to take legal action on your loan if you're not being paid back. The question of whether or not you might extend if the borrower requests that, and if you agreed with it, is a whole different consideration. And as a lender, if the borrower comes along and says, you would look very carefully at why they can't pay back and why they say, when they say they would like to pay back, and whether you think if they get an extra couple of months that it's reasonable to give them an extension. Those are always looked at again with fresh eyes when someone can't pay back and they want an extension, for sure.
Absolutely. And all right. Longer. I also put one of my clauses, just in case people want to know, is I have always the right to pay out early.
Oh.
Yeah.
Okay. All right.
I really like this question.
Go ahead, Wayne. You read.
Okay. How do you vet new investors while you yourself are also a first-time lender, so that it comes out as a win-win, meaning to mitigate your risk of losing money to a new investor, and the investor, maybe I read this wrong. I just feel like I read it incorrectly. Meaning to mitigate your risk of losing money to a new investor and the investor failing to satisfy the deadline. Mitigating that. Basically, how do you vet new investors while you are, a brand new lender?
I think it's looking, it goes back to even what Barry said before, is how much experience are you as the lender in the market? So if you're not using somebody like Sean, who is going to vet them for you and bring you all that information. So let's just say you're going to invest with me. You're not going through Sean. You see me. It's your first time lending. How do you vet me? Well, first off, you need to know what is the deal. How much information do you have on that strategy? What if you've never been in real estate? So what information am I bringing to you on the project, about myself, where the loan to value is? I think you need to know what your risk level is, and Barry's alluded to that too. Like, do you need a lot of equity space on a loan to value? So if you're a first time lender and if you're not real comfortable, I would strongly suggest you go through somebody like Sean, who is going to give you all that information. If you're comfortable enough in real estate that we can talk about the deal, we can show you what the market is, we can show you the comps, we can show you what our experience is and who our team is, then that's up to you on your risk level, because really you look at it compared to stocks, how much information you have on stocks or your broker, really, but at the end of the day, it's still your money. You have to do your own diligence to make sure that you're comfortable. I don't know if that answers the question.
I think so.
Yeah, you would be extremely careful if you're a first-time lender and you're dealing with a first-time investor. You would for sure, best way to go at it would be to get help from somebody like Sean, but you would take a very conservative approach. And if that first-time investor says they're going to do an expensive fix and flip, I would probably say, I think I'm going to start out with something a little easier.
Mm-hmm.
Because that would just be too hard for you as a new lender to underwrite the risk of a brand new investor whose strategy is fix and flip. So
true. Yeah, I missed the new investor part. Sorry.
The lovely Donna asked, what do you do for diligence?
As the lender or the borrower?
Lender. As the lender.
If I'm lending, okay. I would want to know what the project is. I want to know their experience. I want to know because I'm in the industry, I want to know where the market's going. I want to know where it is in the real estate cycle. I want to, I guess it's depending to, are we doing a renovation or are we just doing a bridge financing? I want to know the loan to value. I want to know, do I need to register this? I want to know the capabilities of that investor and how much experience they have. I want to know their character. And I am also going to check out who they are in the industry. I want to know their reputation, because some people, if you may not know who they are, they might present really well, but meanwhile they have those skeletons that you're not aware of. So I want to check out who they are.
Yeah, there's all of that checking to do. So folks, like everything else, there's lots and lots of information that you can quickly Google search to get. There's like a ton of information on private lending. So there's books on private lending. There's courses you can take on private lending. There's lots and lots and lots of stuff to read. So if you're thinking of getting into private lending, number one, say it again, I suggest you work with somebody like Sean and put your money to work through him first and learn what you can from him about underwriting. I suggest you read and look and research and figure out what various private loans are all about before you dip your toes in that private lending water. It can be a very good way to make money. There's lots of folks who do it, and they do well by doing good. And so it's a great strategy, but you need, like all strategies, you need to get educated and you need to get good at it, or you will lose money. So let's follow Warren Buffett's rules. 2 rules. His first 2 rules are don't lose money and don't lose money. Way better to make a little bit less and not lose. So that's the side that you should err on, is to make a little less and be a little more secure, I think.
Absolutely.
Well, Shelley, thank you very much. Wayne, do we have any more questions?
We've actually got a bunch, and we can rip through them. I mean, I'm very curious for the answer to this one, to be honest. Where to find people who give money via promissory notes?
Oh, that's actually, there's lots of places.
I would love to know.
Oh, really? Well, I think Sean Impey, you'd actually have to talk to Sean. I'm not sure if some of his would do promissory notes or if they're all mortgage based or loan. But a lot of times, to be honest, it's networking in your real estate groups, in your Facebook groups, in your communities. It's your neighbors, it's your friends, it's your relatives. It's somebody maybe you've invested in yourself and now they're going to invest with you. I think there's a lot.
Relationships, build relationships, network.
Absolutely. Absolutely. You never know. And ask around.
All right. What else we got?
When lending money, do you recommend a maximum loan to value ratio?
I think that depends on your risk level.
Yeah.
It's your comfort level. You can do 95% loan to value and get 25% interest. You can do 65% loan to value on a first mortgage and get 3 or 4%. So it's all, you really have to look inside yourself and find out how much risk you are prepared. I mean, you got to look at it and say, if I lost all my money, how would I feel? So what else, Wayne?
Is it part of the promissory note that you might take over the project if the project/loan goes sideways? Or is this papered separately to cover the details of what that would entail?
Gee, I've never seen a promissory note that went into that much detail and would talk about if the project goes sideways, how would the lender take it over? That I've never seen that in a note. It would make the promissory note 10 pages long. How about you, Shelley?
Yeah, I was going to say the same thing. I haven't. I mean, you can have that conversation. Maybe you write down, if you extend past a certain date or the project isn't done by a certain time, I have the right to take it over. You could probably write it as a very simple, but like Barry said, it could get very complicated in how it's documented for all the avenues that could go wrong.
So and the other, one of the other parts of that is you can write stuff in a contract that is not enforceable. So for instance, if you lend money on a mortgage, you can put into the mortgage, part of my security is I want you to sign a transfer of land that transfers your property to me, and I get to use that transfer if you miss 3 payments in a row. So that would, that would give you the right in your paperwork. They missed 3 payments, you got the transfer signed, you transfer the property from their name to your name, now it's your property. So you can write it in, but it's an unenforceable clause here in Alberta. You're not allowed to collect your mortgage money by transferring the property back from them to you. You can only go through the foreclosure process. So writing those kinds of clauses in mortgages or promissory notes is likely to be, firstly, hard to do, and secondly, very difficult to enforce.
We're getting to the bottom here. We're very close. I just have to say that Brian Banks says that we hear Sean Impey just as much as it depends these days.
Brian.
We do.
Oh, boy.
But Sean is a wealth of information and knowledge, and he's well worth all the thoughts and talk that he goes about, because he really is
extremely valuable and supportive in our group. So it's very easy.
And that's why we hear.
Yeah.
Other than that, we'd never mention his name, would we? I don't think so.
Nice guy too.
Well, Wayne, I'm picking on somebody else, not you. You should be happy.
I just felt bad for him.
No.
After all I've been through. What is a typical lender fee, if any? Do you guys want to answer that, or do you want to send that to Sean?
Well, go ahead, Shelley. What do you say?
In mine, I'm not necessarily charging lender fees because we're based just on interest. So I do mine a little bit differently. I think it depends on how you set up your private lending parameters, right? Some people charge a lender fee. Some don't charge a lender fee. Some charge a higher interest rate. Some don't. I think if you go through Sean Impey, like through that avenue or some of these other money loaning places, they do charge lender fees and admin fees. I don't. So I just
lender fees are very common. A broker fee is common. If a broker puts your money out, he needs to be paid. If you're the lender, lenders often have a lender fee. They have administrative fees. They have interest rates they get paid. Sometimes they have interest reserves and say, yeah, you're going to borrow the money from me, and you say your project is done in 4 months. So another thing that's coming off your loan is 6 months worth of interest just to make sure we're covered while you're doing this. So there can be lots and lots of fees and administrative things and interest being deducted from loans. And it really all depends on what you want to do as a lender. It's kind of wide open.
Yeah, it really is. Yeah. And the other thing too is you have to look at is if you're loaning money, you don't want to bankrupt that person either. You're trying to create that win-win, right?
Yeah, I mean, you want to be paid back for sure.
Exactly. So
you want a good risk that's going to pay back, and then come and borrow from you again and pay back.
absolutely.
That's how we want it to be.
I think we need a new drinking game. Every time someone says Sean Impey, we have to take a shot. Every Thursday.
I'm in. Sean.
Right. Yeah.
Rainbowberry, 3 shots.
Going through the comments here. And I have to say, Shelley, like this is probably I'm going to go out and say I think this is actually one of our most successful nights for people engaging, and for the viewers that we had a ridiculous amount. You are very, very popular in the comment section.
Oh, thank you. Wow. Okay, I'll have to read through it all after. I saw one that you popped up that said they had fun. I was like, oh, good, because private lending can be kind of boring. So if people are having fun, that's good.
No, you are very, very much loved.
Well, I hope that there's a lot of information that people are also taking away as valuable. So thank you.
Yeah, tons and
Very
tons.
valuable.
We have a couple questions left, but I think we're kind of over time on it. But
Yeah.
We can definitely have a look at that after. And Shelley, if you don't mind, maybe going through and see if we missed anything.
Sure.
And we might get on to round 2 of getting past getting started in private lending, get on to some of the more difficult deals and next steps up at another time. I'm sure we can get Shelley back. If it's this much ego stroking for her, she'll be back in a flash at some other time. Isn't that right, Shell?
Well, I might be breaking out of my shy Shelley shell.
Oh, yeah, sure hope so. Yeah, really, I hope you can achieve that, because that would be good if you were just able to, talk to people and not
Right.
be.
So reserved.
Well, thanks, everyone. Signing off now. Good night, everybody. Thanks, Shelley. Thanks, Wayne.
Thank
See you guys.
See you all again.